Hey everybody, it's John King, and thank you for joining me on my live stream today. Super excited to come to you with another weekly update. So first and foremost, what are we talking about today? We're talking about big money betting on housing. So I've got a lot of people who have been waiting for the housing market correction, trying to figure out when we're going to hit the bottom. And I got to tell you, what I'm reading right now, what I'm seeing right now tells me that the big money thinks we're really close to the bottom. Before I get there, let's go over what's happening in the markets right now. So jobs report comes out first Friday of every month. This morning, it came out really strong. Okay, strong jobs keeps interest rates higher. The Federal Reserve lowers interest rates when jobs are struggling so that they can spur the economy on and get companies to hire. The Federal Reserve raises interest rates when inflation is a problem. And inflation is a major problem. We have the things I've been talking about for the last 3 months with what's happening in Iran and with oil. Inflation is causing pressure for rates to go up. Jobs were the opposite effect. Jobs were the yin to the yang of inflation. And jobs report today showed lots of creation of jobs, more jobs created than expected, which means the mortgage market rates got higher today. And remember, we're trying to predict where the Fed's going to go because the Fed's kind of driving the economy, but rates don't wait until the Fed makes a decision. Rates are trying to predict where the Fed is going. And here's the deal. Back at the beginning of the year, everybody expected 2 or 3 rate cuts this year. At this point, nobody's expecting any rate cuts. As a matter of fact, they're thinking that we're going to have some rate hikes this year. So big difference. Now that's already built into mortgage rates. But as we see, so the thinking that there's going to be no rate cuts already built into mortgage rates. The thinking that there might be a rate hike partially built into mortgage rates, but days like today where we see, we thought jobs were a problem and inflation was a problem, and at least they created a tug of war. Well, now jobs isn't a problem like we thought, or at least it appears it's not a problem. Well, their one side of the tug of war just let go of the rope, and so the other side wins. And that's what we're kind of struggling with right now, and that's going to be leading to higher interest rates, or at least a pressure on mortgage rates to stay high. Mortgage rates are for sure driving buyers' decisions right now. So we've got a lot of buyers who are buying, but a lot of buyers who are sitting on the sidelines that are waiting because they're waiting for affordability. They're waiting for house prices and interest rates to line up perfectly. But here's the deal. Housing demand has not collapsed. A lot of buyers are still looking for houses, and there's enough demand to keep up with the number of houses that are coming on the market. I want you to think of supply of homes like a bathtub, the water in a bathtub. Okay, so the water level in a bathtub can rise if 2 things happen. Either A, you turn on a lot more water to go into the bathtub. That's new listings that are coming on the market. That's a healthy increase in listings and inventory of homes. And then the other side is how many are going out the drain at the bottom. That's homes that are being sold that are or taken off the market that are no longer available for sale. And so we're seeing homes coming on the market and homes being sold at the same pace. So inventory levels are staying the same. They're rising a little bit. That's a healthy market, okay? But what it means is with inventory being healthy but not flooding the market, we've got a good amount of balance. Why does balance matter? Because it means house prices aren't going to drop, okay? House prices, this doesn't look like 2008. A lot of people are worried, oh my God, the market's gonna crash and the bottom's gonna fall out from underneath us. I don't think so. A couple of weeks ago, I showed you a chart kind of showing you where interest rate and house prices actually have gone over the last 3 cycles. And we're right there where prices should start going up based upon the cycle. And the big money thinks the same thing. Builders are getting bought. Okay, so Berkshire Hathaway just purchased Taylor Morrison. Taylor Morrison, the 6th largest home builder in the nation. It was not a struggling company. It was not a company that had a bad business. It was Berkshire Hathaway saying, you know what, we can make this better. We can put our money behind it and accelerate their growth. And then another company, CoStar, if you're not in the industry, you may not know this, CoStar bought Zonda, which is basically a company that tracks new construction, land development, stuff like that, and really getting on the leading edge of new construction. Why? Why is the smart money watching new construction? It's really simple, because housing supply is the problem going forward. Housing supply is not going to get solved. And as soon as interest rates start coming back down some, as soon as this inflation issue in Iran is resolved and we see more confidence that interest rates are stable or going down, we're going to see more buyers coming in. Okay. And those buyers are going to open up the plug at the bottom of the bathtub and drain all of the available inventory out of there. And now every time that a little bit of water comes into the bathtub, it's going to get sucked right out by a buyer. And so builders are the way that this is solved. Housing supply is solved through construction. And the big money may be saying, you know what, I think we're at the bottom. I think I want to throw my money into new construction. What we have here is we have CEOs, owners or really CEOs and boards of these huge companies that are looking forward into the future. And they're saying, you know what, we think that there's going to be another construction boom. We believe that the housing market is going to be strong going forward, and they're buying into it. Okay, literally, the owner of the prior owner, he's now retired, Berkshire Hathaway, Warren Buffett talks about this. He talks about the cycle and when you buy, and that he invests while people are fearful. And right now, everybody's fearful, and he sees it as an opportunity, which is a leading indicator, which is he's investing money because he can see beyond the darkness that we're in right now. Okay, every cycle is a cycle. We just don't know when it's going to end. It's kind of like living in Alaska and not knowing how long the day is going to last and when are you going to get some sunlight. We don't know, but we know at some point, we do know, by the way. But in general, at some point, you're going to get sunlight today. It's going to happen. It may take longer than expected, but it's going to happen. And here we are with two very large companies investing money into new construction, which tells me they are calling a bottom. They're saying we're close to the bottom. And so here's what you guys need to do about it. We need to think about the homeowners right now, you as a homeowner or you as a buyer, because to be a buyer, you have to have a seller willing to sell their home or you're buying new construction. And the homeowners have equity, but they feel stuck. They don't see another home that they can buy. They don't feel like they can trust where interest rates are at. And so they're not putting their homes on the market. But now is actually the right time for you as a homeowner to get your home sold if you have a plan. Okay. The problem is being a contingent buyer. So as a homeowner, and for those of you who aren't homeowners, you want to understand this because you're going to be a homeowner in the very, very near future. And once you're a homeowner, at some point, you're going to want to move up or move down. You're going to want to buy a bigger home, move to a different neighborhood, downsize. And so you have a challenge, which is there's three ways to trade a home for another one. The first one is you sell your home first, you're homeless, and then you buy another house afterwards. That's great because now when you go to purchase, you're a strong buyer that doesn't have a house to sell. The second option is you buy and sell at the same time. That's great because you don't have to worry about being homeless, but now you have to find a seller that's willing to wait for you to find a buyer for your home, or a buyer for your home that's willing to wait for you to find a seller to sell you a home. And so that's called a contingent offer. And then you have multiple transactions dependent upon each other. It makes it a higher risk. It means that your offer won't be as strong and you won't get as good of a deal on the home. So the third option is you buy first. That's the best option. Buy a new home first. That way you are not contingent. And then you sell your home after you've moved out. You don't have to worry about people walking through your house while you're living there. You can fix it up and make it nicer. The problem is, where do you come up with the money for your down payment? The problem is, how do you pay for two mortgage payments at the same time? Okay, so if you buy before you sell, which is the ideal situation, you're kind of stuck with where do I get the money from and how do I afford to make those monthly payments? And I have some amazing bridge loans to help you out. We have the ability to loan you up to 80% of the equity in your home as a bridge loan. You'll make no payments on it whatsoever. You get 4 months to sell your home. And I don't have to count the payment on the house you're moving out of either. So you get to qualify simply based on the new house that you're purchasing, the monthly payment on that new house, and you do not have to count the payment on the house that you're moving out of. And I'm able to give you funds towards the purchase of that next home. If you wait to buy when everybody else is buying, now you're in competition with a bunch of other buyers. Even if you're non-contingent, you're still not going to be as good of a strategist, as good of a negotiator as you can be right now when there aren't as many buyers out there buying. And so don't wait without a strategy. If you're waiting to sell your home because you want the market to get better, realize, yeah, your market's going to be better for the house you're selling, but you're also going to have more competition for the house that you're buying. And so that's critical for you to understand and make sure that you review your options before you move. Okay, for my first-time home buyers, right now, the opportunity is huge. Okay, rates have moved up a little bit, but the opportunity for you to buy a home right now is really, really good. And we just need to pay attention to where rates are going to go down the road. Okay, I know that when rates come down, we're going to see house prices go up. And a lot of people are saying, oh my gosh, marry the house and date the rate and you can refi later. Sure, you can. But when are you going to be able to do that? That's the key. So do not put yourself in a position where you're buying a home that there's no way you can afford that home in a couple of years. Okay, don't get a temporary buy down and get a low payment now thinking, well, by the time that payment pops up, I'll be able to refinance. There's a lot of risk involved in that. Do I think rates are going down at some point? Absolutely. But do I think they're going to go down fast enough? We've continued to have whammies thrown at us, unexpected information like the whole problem this year with Iran that is driving interest rates up. And we have to make sure that we're taking that into account. Looks like I've got a question here. Looks like it's just Kevin saying good afternoon from Lakeland, Florida. Good afternoon, Kevin. Anyway, guys, appreciate you listening to me today. If you have questions, please post them into chat. I'll respond to them after as I go back through the comments afterwards. I hope everybody has an absolutely wonderful weekend, and we'll talk to y'all soon. Bye-bye.